markets. So we decided to create VeloTrade to function as a bridge between the world with too much liquidity, which had no access, no direct access to the corporate world. Investors come to our platform, and they can be family offices, high net worth individuals, hedge funds, asset managers willing to deploy funds, and they actually, through the VeloTrade platform, are able to provide the funding to corporates, so the corporate, of course, gets working capital, and the investor gains a return, which is extremely attractive given the risk that is associated with that.
I mean, it makes sense that somebody who, like yourself, who has spent, almost 2 decades or so in, the big corporates, you guys, in a sense, were the gatekeepers of this, right? And then now that you're sort of stepping into the startup scene, I think, like you said, it's bridging this sort of gap, which is amazing.
Absolutely.
Yeah. So, like you said, you spent too long, as you said, in those big corporates. So you've worked for some big name companies over the years, like JP Morgan, Bank of America, Lewis Capital Markets. So what were the upsides or the benefits to working for those big corporations?
Well, those corporations were great training grounds, and actually I think if I were to speak to a youngster, I would actually advise him to start on those organizations. There is a lot to learn. There is how to work, what responsibilities are, how you talk to clients, how you meet deadlines, how you navigate through the politics of such organizations. And the other advantages are that you have a lot of support around you. You have a legal department, you have a settlement department, and so on, which makes the fulfilling of a specific job much easier. The downside of that is that your job is extremely structured and sometimes ends up being a bit of a routine because the corporation needs to fulfill a specific job and create that apparatus around you, but you'll keep on doing the same job. And I think that's the best way to kill creativity, and so in the long run, there is a need to do something more.
Right, absolutely, and something more you have done. So I wanted to ask you, how has the culture in that industry changed over the last few years, with obviously with technology and all the other changes that are coming our way, even culturally? How has the industry changed?
Well, I think the traditional financial institutions have not. Technology hasn't really impacted the job of those who are in the industry. I think regulation for sure has impacted it and has impacted it for the worse.
Right.
So those who are, one, I don't miss that environment because that environment has worsened. As I said, a lot of regulation, so there's less creativity and a job that was structured. When I was there, now is even more so.
Right. So there's even more sort of restrictions for people who are in that industry now compared to before.
Absolutely. I think that's fair.
So I want to go back to what VeloTrade does. Could you explain trade receivables and how businesses stand to gain from trade finance?
So I would like to first, so we started off with invoice discounting, which is a form of trade finance.
Right.
We are broadening the spectrum of products that we're offering, so we moved from trade invoice discounting to invoice financing. We are active in the e-commerce space, we do e-commerce financing, purchase order financing. So we're broadening the spectrum, but the basic and fundamental idea is that corporates need liquidity.
Right.
And there are many ways to access liquidity using trade finance, using trade assets as almost a collateral to the funds that they receive, makes it a very fast, a very secure way of getting funds and extremely scalable.
Right. Oh, that makes sense. Yeah, absolutely. So, how do you think that this is something that isn't utilized enough in the world, and that's why you sort of push this forward as a huge part of your company? Do you feel like it's something that companies don't think to utilize?
Yes, I think companies in certain regions more than others. So there is a big education process that we have embarked on. We have a blog, we are we're giving a lot of knowledge base to our counterparts, but corporates have to learn that there are other ways of doing business. So the traditional business owner is used to going physically to the bank branch and getting a loan, but that's not efficient. It's not efficient, and it's getting worse because banks have pulled back, with what we discussed a few minutes ago.
Right.
So the corporates have to become more inventive, and they have to partner up with corporates like mine. We have one of the biggest added values that we give to our corporates is access to a diverse source of liquidity.
Right.
So traditionally, if you go to the bank, even though there are many banks in the world, they all have very similar approaches to sectors, to structures, and to tools. So if one tool sector falls out of favor with one bank, it's likely to follow with the others. On the other hand, we offer access to high net worth individuals, family offices, hedge funds, and so on. So these investors are different, and while a bank might need 15 boxes ticked in order to provide funding, our investors don't necessarily think in the same way.
Right.
So we are a platform, so we represent the information that we get from the corporate. We tell the investor, hey, this transaction, there are only 10 ticks. Check. It doesn't mean that it's a no-go. The investor has the opportunity to decide whether that is an interesting transaction. And as I said, each investor has different metrics and different approach to risk. And so many transactions that would not go through a traditional financial institutions are very likely to be fulfilled on the regulatory platform.
So, I mean, you've spoken about how trade finance can sort of benefit these smaller or mid-sized companies and the entrepreneurs out there. So, the question I have for you is, how does trade finance benefit the investors? If you were to pitch to investors to come into your platform, what's the usual pitch?
Well, that's the easy pitch because trade finance is, by definition, a short-dated investment from the investor's perspective. Assets on our platform range between 30 days up to 120, sometimes 180. So it in itself is a short-dated asset, which means that every time there is an expiry and a renewal of that transaction, you can reassess risk and you can adapt the pricing to changing conditions. And there is nothing that I can think of in the short term of the same kind of maturity that compares in terms of return, and even more so in terms of risk. Central banks, I think, have done better trade a massive favor in the beginning of the year, slashing base rates to zero virtually everywhere. So while the investment in trade finance assets made sense before, now it makes even more sense and is a very competitive. And trade finance, I always say, was 10 years ago or 5 years ago, was extremely very boring segment of finance because it was monopolized by banks and nobody else really had access.
Yeah.
But now with the fact that we're creating these bridges, trade finance has become extremely exciting. And again, in terms of liquidity, return, and risk, there's nothing else comparable. So, for example, coming 1st of January, an investor sitting in front of his screen to look at an equity market which is mainly frothy, valuations are extremely high, bonds are untouchable, volatility is now a little bit high but is likely to fall, dividends will follow because they're correlated to interest rates, and there's nothing else left out there. And the funding gap between the liquidity available and the corporates is massive, and it will take years to fulfill, so this opportunity is very real and very present.
It's really keeping up with the times. That's amazing. Amazing. So going back to your own personal story, what I found quite interesting is that you already had 5 children at the time that you decided to leave this very sort of comfortable and secure work situation in your life. So you left that for the sake of owning something that's yours and creating something that is yours. So what was the sort of, do you remember a moment or a catalyst that made you think, I gotta get out of this and start something new?
Well, again, I think routine was new in so to speak.
Mm-hmm.
The other co-founder, John Luca, which was a former colleague of mine showed up in Hong Kong. And we started looking at the world of trade finance. And I think the thunderbolt moment was when we went to an insurance company and we asked for coverage of some counterparts, which could not get any funding from banks. And we heard yes, yes, no, no, yes. So that suddenly kind of, we looked at it and said, this is a market inefficiency. And when we started diving even more into it, we realized that the inefficiency was much larger than what we expected. And so that realization that there were these two worlds, one world with too much liquidity, desperate to find yield, and the bigger world next to it, which was desperate to get that money, made it pretty obvious. So I always say that in life sometimes you have opportunities that you just cannot let go.
Yeah.
And this for me was really that opportunity. When I looked at it, I said, something like this is a perfect story. And again, had I let it go, I don't think I would have found something as appealing as what I'm doing. And almost 4 years into the adventure, it would be even more exciting.
So would you say that the timing was just right? Because the company started in 2015, right?
The company started in 2015, but we were doing something slightly different. We were trading with our own balance sheet. Value trade with the business model as it's now. My mind started in 2017.
Okay.
So that's when I quit my grownup job to do value trading with them.
Yeah, I love that. I think that's on your LinkedIn or something. Like you literally have the phrase, I quit my grown-up job. But now you're playing in the big playground, so I wouldn't say that's a bad thing at all. So if you could go back in time, what's something you wish you'd known when you first decided to go all in with value trade? Is there something that maybe you could advise people to look out for if they were to pursue the same certification?
It's an interesting question. I don't have a straight answer to that. The point is that you do look at the word and you see a need, which is what I explained earlier. And so you jump in and you try to fulfill that need. But some decisions that you make are not the right ones. So you have to have the ability to understand what you did wrong and fix it. But the advantage of a nimble organization like a FinTech startup is that that decision process is much faster. So you can somewhat afford to tread not on the wrong path, but on the non-optimal path, and suddenly realize you can back step those 2 or 3 steps and change direction,
Right.
which is something that in a large organization is virtually impossible.
That's true, absolutely. So obviously, as you said, you would advise the sort of younger people in this industry to go into big corporations to sort of learn structure and all those different areas of this industry. So how, if you could list it off, how would you say your prior experience in those big firms benefited you specifically as an entrepreneur?
I think it's a form of mentality, so a way of thinking. I'll give you a simple example. If you work in an investment bank and you tell your client or your superior or whatever that you will have something ready by Wednesday, it might be in the wee hours of Thursday, but it will be done.
Yeah.
And that's a small example, but then you step from that world, you step into the real world, and you realize that Wednesday tends to become a Thursday, maybe a Friday, and sometimes it might extend into the next week.
Yeah.
That, in my world, is something that I find unacceptable.
Right.
You learn how to be coherent. You know that, okay, if you're really sick, you stay at home, but you have to get the job done. And one added very important aspect, which in my life I always underestimated, but I realize now how important it is the concept of networking. And I've never really thought much about it until I actually quit the famous grown-up job and started setting up, working full-time in value trade. And I realized that, okay, Hong Kong isn't a especially easy place to gain access, but I had that reach to decision makers, and that's invaluable. I think without the network, it would be very difficult to set up.
Absolutely, yeah. I think networking is a game changer, and that goes across any industry, right? To open doors, you gotta know where the keys are, and they're usually with the people in your community.
I think it comes down to trust.
Absolutely, yeah.
The network is a collection of people that trust each other, and so are happy to do. And actually, people are fundamentally, that's my view, are fundamentally nice people. People
Really?
are nice, so people will always, in my experience, will make an effort to pay.
Yeah.
Unless there's something that's startling that previous experience.
Right.
But I realize that the power of network, I realize a bit late in my life, but fortunately I managed to build it and
yeah. And here you are. Yeah. I think it's really refreshing that you've spent, 20 years in the banking industry that I think from the outside looking in looks quite scary. And you say that, your experiences with people have been pretty positive.
that was off the bank.
Okay, that's
Sorry,
after.
it wasn't
Okay.
off the bank.
So you mean like once you started your startup and you had to put yourself out there, it was quite well received?
Yes, absolutely.
Amazing. Okay, well there you go. It's not too scary out there if you're going it on your own. That's amazing. So, could you go?
Hello, it's
Hello.
co-founded the company mainly, as I mentioned, Jean-Luc and I, and we have a third co-founder,
Right.
Emmanuel, who joined just a little bit later. So
Yeah, I just mean without
it's,
the big
it's-
corporate.
yeah, I know.
maybe without.
I mean, there are some co-founders, some founders that have started out alone,
Yeah.
but I think it's very important to have a team.
Absolutely.
Small team because you have people who to bounce ideas with, and sometimes just do a reality check, and having the founders that you trust is super important.
So how did you actually formulate the relationships with those co-founders?
But Jean-Luc and I were used to be colleagues in Dresdner. That was
Right.
actually between JP Morgan and Bank of America. We actually didn't really get on because he was a sales guy and I was a trader, so we always used to, he was arguing for his client and I was arguing for my book. But we created a bond.
Oh.
And then I moved to Asia and he moved to Asia, he went to Singapore, I came to Hong Kong. And then a bit by chance we reunited in, I think it was 2014. And that's when, a bit by chance, a bit because we perceived that inefficiency was there, we started looking at the trade finance initiative I mentioned with capital, and then we extended the concept of platform and how trading is money trading.
Wow. So what started as a sort of rocky relationship turned into this? I'm excited.
It's
Just
part of the banking
dynamic.
exactly.
Right. Okay. Yeah, that makes sense. So, could you go a little more in depth on your thoughts about the traditional ways that businesses acquire their funding? Because I really want to get down to sort of the issues that you see in that traditional sector.
Okay, so traditionally, any business will have to refer to say, the banking sector. I like to refer to them as traditional financial institutions. And because they have a monopoly on the funding, they always had, they were the one making the decisions. So if you think about it, if you're sitting in a bank and you're getting a decent salary, you're happy with your job, a corporate comes to you, you don't have, if that corporate does well, you'll be happy with a good job.
Right.
But the downside that corporate doesn't do well is so huge that you're naturally averse to risk. So if you multiply that by every individual who's working at that traditional financial institution, we will not have the willingness to dare. And so for the corporate owner, it's extremely complicated. So if you're doing well and if you need financing but you're not desperate, you get all the funding you need. If on the other hand you need that funding to make that step, it's getting increasingly difficult. Just the onboarding process after 2008 of small and medium corporates, especially in Hong Kong, has become extremely cumbersome. So the result is that a large corporate will get a very high percentage of the requests for funding accepted. The smaller the corporate, the fewer the acceptance they get, which will make their life even harder. And I think that's the way it is, and it's wrong.
Yeah,
And
absolutely.
so I think technology, mainly technology, the ability to exchange information, the ability to reach out to different investors who have a different way of thinking. Hedge fund manager, by definition, is far more more of a risk lover and will and we'll actually look at that small reality. And in our case, I think the big, not misconception, but the big mistake, or the one thing that we sometimes I can't get my head around is that traditional financial institutions, they only look at the supplier and make their funding judgment on that without really looking at the relationship that they have with their clients. So when it comes to trade finance, we are actually looking at the relationship between the supplier and the buyer. And so our investors actually take the risk of the buyer, who's generally a much larger organization. And so the small guy is actually can scale up because he's offering an asset for an investor, which is backed by a promise of payment by a much larger corporate, and therefore the transaction in itself is much safer.
Amazing. So I kind of want to delve into the sort of FinTech side of this conversation. How is the internet, obviously there's a billion ways to probably answer this question, but how is the internet changing the way financing is done? Maybe you can talk about the pros and the cons.
That's a good question. So, internet is not the solution. Internet is a tool.
Right.
And in my view, internet is obvious, is the best communication tool that has ever been invented. But it doesn't create money. So if a corporate needs funds because they have to pay their supplier, the internet is not in itself going to solve that problem. So we are looking at a traditional financial instrument, and we're using the internet technology to help us with all that problem. So the biggest advantage of internet for us is reach. So fair enough, we're based in Hong Kong, we're regulated here, but our business is local. So we serve corporates across the world. Why? Because they can just www.trade.com and they can reach us.
Right.
So that's the pro. The negative is that sometimes, and I think that's an issue that impacts more the investor than the corporate, because ultimately the corporate is receiving money, so he's in kind of a good position. The investor, on the other hand, is the one putting capital at risk. So the problem that I perceive with internet is that when you look at the corporate, you tend to judge it only by the webpage.
Right.
You don't really know what's behind.
Yeah.
So we've noticed, especially when it comes to larger investors, the internet is a great tool to connect, but it's not enough. There has to be that interaction, that giving confidence to the investor, a founding team with a bit of white hair, processes in place, a regulatory status, knowing the business, and so on, make a difference. So internet alone, at least in our segment, which is FinTech, and it's Fin means finance, and it's a very important part of it, again, it's a tool, but it's not all the comprehensive solution.
Right. So when you say that, when these people go onto a website and, they see sort of, it's like a cover book, right? So I've noticed that obviously you and your co-founder, you guys do a lot of sort of speaking engagements and a lot of things that sort of...
Here I am.
Yeah, exactly, here you are. So you guys are putting yourself out there. So how did you have, was that sort of like a learning experience while you guys were developing Trade? Did you sort of suddenly realize the value in sort of putting yourself out there on those speaking engagements? Because I saw that GMFO was on Bloomberg and things like that. So how big of a role are those sort of going onto media platforms, doing YouTube videos and stuff like that?
Again, they create awareness, but I think there's always an extra layer.
So you don't think that it does much? How much does it contribute to the credibility that you guys have as a platform?
No, I think it does, because people listen to what you say.
Yeah.
And then I think what they do need, and that's what I'm saying, that internet on itself and social media on itself is not the only solution. And then they have to make sure that what you say is actually reality. Yeah. I mean, one example that I remember is cryptocurrency exchanges. There have been some massive blow-ups of crypto exchanges, and looking to superficially, they look great. So how do you make sure that that doesn't happen? Well, you have to understand if the technology is correct, if there is a risk, an underlying risk that you haven't perceived. And we have spent a lot of time working on the product to make sure that regulatory status was there, the legal agreements were in place, the workflows, operations. We've done a lot of work. And what we need to do to grow, we realize, especially the larger investors, is to convey that message. Media helps, but it's not the only solution.
Absolutely.
It has to be coupled with other interactions.
Absolutely. So, going back to investors, I want to be very aware of our audience out there. I want to give some sort of actionable insights, further actionable insights in terms of what would you say, now this might be a big question, so feel free to go as focused as you want, but what are the main criteria that investors look for in a business?
You're talking about investors that want
on your platform, for example.
They want to purchase assets or they want to invest in my company?
Purchase assets.
The main thing, the first question is always going to be yield. Because, and especially the less educated investor, and you'd be surprised that there are a lot of them out there, they only look at the yield. Then the second question is risk, of course. And the third question, I'm going to say it must be obvious, is liquidity.
Yeah.
So the investor wants a high yield, he wants low risk, and he wants low liquidity. So our job is to represent those three aspects of the transaction so that the investor can make an educated decision. And the sophisticated investor will say sometimes a 5% return is better than a 9% return because the risk associated with 9% might be larger in his metric than what comes, relatively speaking, to that 5%. So it's actually far more exciting and interesting to speak with sophisticated investors because they really understand the trade-off between those three variables, especially between risk and
Right. So would you say that the less mature investors out there, what are the common mistakes that they make?
I think they go into transactions without understanding or evaluating correctly all the aspects, the risk aspects. So they tend to get lured into the. So I know of funds that have target rates that are extravagantly high, which any reasonable investor should say, well, if the return is so high, there has to be a lot of risk associated. And so, because markets are yes, inefficient, but not that inefficient, generally speaking, a very high return would bring defaults, would bring delayed payments, and so that headline number that you see might be much closer to that lower number with a lower risk associated.
It's all about picking your battles carefully.
No, but I think our job is to transmit information. So we will show the transaction, we will highlight what the pluses and the minuses are.
Right.
And then we have a very thorough risk assessment. There are 0 defaults since inception. So we've been doing a very good job. Maybe sometimes too good. But that's the reality of and then you have other platforms that promise much higher return, but then we factor in the defaults that come in and the fraud aspects and so on. But the ultimate return, the other return, not being sure.
Very well put. So, in terms of your predictions for the future of financing, you say that the internet, obviously, and media, things like that, they're just tools. So, what are your predictions in terms of the future of finance and sort of the direction that the role of technology is going in terms of that industry? Do you have any predictions?
Well, I think there will be, I think the disintermediation of finance will continue. Traditional financial institutions, i.e. banks, I won't get that into the banks, but we actually partner up with them and we don't feel we are competing with them, but we are complementing their offering. Some parts of their business are unassailable for us. Banks take deposits and they reward the deposit at zero, so they have an almost infinite access to liquidity.
Right.
But then there are aspects of finance that traditional financial institutions can't do. We've chosen trade finance, there are possibly other ones. And technology will enable more and more information to be transmitted And so those inefficiencies that plague the market are going to reduce over time.
Right.
Everybody's talking about block change. We have to look into that aspect as well. I think it's still early stages, but that might be one of the solutions to have a perfect market, but I think we're very far.
Right.
But that's something that we can tend to look at. The objective is technology will allow investors to make good assessments and brokers to demonstrate that they have some strengths and therefore they're worthwhile for receivables.
So I think, you know how with cryptocurrency, I think that sort of fintech area, there's a lot of, or at least there initially was a lot of distrust or maybe concern about legitimacy with the platforms out there. So since you guys have an online platform, is there any concern about your legitimacy as what you guys do?
Well, I think cryptocurrencies is something that's completely it arrived, that's big swings in the markets and blow-ups, so it's probably not the right thing to look at. But the reality is that people do online banking. People will purchase through platforms. So 20 years ago, to ask somebody to put their credit card number on an Amazon platform, it was tough. It was a tough prediction.
Yeah.
It was difficult to convince them. So that's definitely helping. So anybody, most of the world is used to online banking. So that first obstacle has been overcome. So in our business, the corporate has some residual risk, but we never advance the whole amount, so they want to make sure that they're good for the remaining amount and maturity when the trade finance asset settles, but they're receiving money upfront. So they don't have much to worry about because they are.
Yeah.
So those need to be reassured of investors. And we are not a cryptocurrency exchange, so hacking, we do penetration tests, we have an extremely capable, very professional technology team based in Vietnam, and they do the fantastic work. So we do double-factor authentication. We have a whole load of security aspects, but money actually doesn't necessarily float on the platform physically, the money itself.
Right.
So somebody coming on our platform is stealing money or just something that cannot happen.
Yeah.
But fair enough, we have to have a dialogue with our investors to demonstrate that what we tell them, as I mentioned before, is reality. So we represent to our investors that we do certain checks. We have to make them comfortable in the fact that we actually do that. So the onboarding of an investor, especially an institutional investor, can be quite long because they need to understand the workflow.
Right.
But invariably, because the asset is so appealing, and because we did a good job at creating that infrastructure and that machine, they end up being happy with their due diligence and they're signing on. So they're signing on to institutional investors as we speak, so moving in the right direction.
That's very exciting. Amazing to hear. So obviously, with all of your wealth of experience, I want to ask you quite an obvious question, but what advice do you have for younger or maybe smaller businesses who are currently struggling because of the ongoing situation out there? Do you have any advice?
Well, I think the ongoing situation out there, as you describe it, is it's a very special one and a very harsh one. But the reality is that any business faces obstacles and hurdles all the time. So it's not, I mean, that specific one actually turns out that for some enterprises being actually a fairly positive thing. There are some businesses are thriving, others are
E-commerce, for example.
Exactly. So the advice is to have corporations that can be flexible. We have, for example, we have everything on the cloud. So if we have to move office tomorrow, we just lock one door and open the other. It's not a big deal.
Yeah.
If on the other hand, you go down to a physical workplace and your servers are there and you need to be in that specific place, if something happens that building or to that town, to that city you need to move, then you are at risk. So reactiveness and flexibility, I think, is pretty obvious. I'm not saying anything great, but that's what every business should have. And I think this current situation is proving that some have that flexibility to react and survive, others do not.
Absolutely. All right, so to those who are watching at home right now, I just want to remind you guys, if you have any questions at all, please make sure to leave them in the comment section of the Experience Series live stream on Facebook. We will be wrapping up the interview portion of this evening very shortly, so we will be taking on your questions. Make sure to get them in while you can. I have basically one last question for you, but I think this is going to be a good one. What's the big picture plan for VeloTrade, and what are the next steps that you want to take with that business?
Wow.
Feel free to go as in depth as you like, because I really want to know,
So
exciting space.
I think nowadays many young companies, because of technology, because of internet, are just pushing for the maximum possible growth, expansion, counting on an exit.
Right.
The flip side of that is that if that exit doesn't happen, everything blows up. The company, investors will lose money, and it will be the end of that project. Our strong belief is that it's not necessarily the right approach to work with an exit in mind. The idea is to create a great corporation, and a corporation that is profitable, that has a faithful base of clients. They're there to serve our clients, both corporates and investors, and we want to create value. And if we do that properly, the exit will happen. So I think that's, especially in these times, you see some reality in this, like, oh my God, how can that work? And some do, but the downside if it doesn't, it's so dramatic. So that's not our approach, and we are in the process of building a great corporate that can actually live on its own. And if at some point there's an exit, then we'll consider it and see if it's worthwhile doing it or not. But every day we go into the office not because we're thinking about somebody one day buying our company, but it's because we want to create a great company.
And that you guys are, I think it's amazing that there are a lot of people out there who probably over the years have needed a company just like yours, and now it's there, and it's amazing. So I'm really excited to be able to have spoken to you about this and ask my own questions. But I think it's time to ask some questions from our audience. So I have some right here.
I hope they're not too mean.
I'm sure they're going to go with some of you, don't worry. All right, so, this one's an interesting one. Would you want your own child to go into traditional banking based on how it's changed over the years? I think this is basically because you said it's a good place to learn structure, but you don't miss it. So I think that's probably why this person's asking the question.
Wow,
Would you want your own kid to go into
very good question.
Yeah.
Actually, my eldest son is just applying for university and is going to go into economics. So that might be leading the path. I remember when I was a kid, my father told me, when you start working, you should either be a consultant or work in corporate finance because you learn how corporates work. I think that piece of advice still applies.
Right.
But the one thing I would add is that quantitative knowledge is becoming more and more crucial and fundamental. And that stuff you can only learn in school. And if then you want to move to something that is less quantitative, you just buy for books and learn.
Right.
So would I want my kid to get into a bank? Depends what segment of the bank. But some of the leading investment banks still probably worth going for, exactly for that formation period.
Yeah.
Would I want them to spend 20 years in a bank? Maybe not.
Right.
I think it's important to explore. And the world has changed so much. I mean, when I graduated, banks was kind of the place to go. Now there are technology companies, there are so many different, work is changing, and it's getting much more exciting.
It's
there are
really
more
hard.
choices.
Yeah, exactly. It's really hard to define things these days. There's all these intersectional sort of industries now, and that's definitely because of tech. So I think before we move on to the rest of our questions, we're just going to take a quick break, and we will continue with these audience questions very shortly. So we'll be back.